Hello traders, how are you? Vladimir here from Traders Academy Club. In this video, I would like to present you the number one, from my point of view, divergence trading strategy I use, and to explain the method behind it, and to give you my little tricks for this strategy. So let's begin. But a quick one right before I start to explain the strategy and to explain how it's done and how to use it properly. If you are new to this channel, first of all, welcome to our fantastic community. I would like to invite you to subscribe to this channel. Please follow the subscribe button below the video. And remember to enable the notification so you know when a new content is available for you. As well, I would like to invite you to join us in our trading family, the Traders Academy Club. You can find the links to that below this video in the description or in the pinned comment inside the comment section. So to explain my strategy and show how it's done and the way it's done, I want to take a trade directly from Traders Academy Club, and this is our channel for our members, and I want to talk about this trade. It was a Nasdaq and it's a sell trade idea. It's since 9th of September, and we still carry on this trade, and I want to explain why, and you would see in a minute how important is timing using this strategy in a multi-time frame combination. Okay, so here we are in our trading journal, where I track record all the trading ideas, and this is the trade I refer to. Again, Nasdaq, bearish idea. It was short mid-term. Now it is caring for even more than just a short mid-term, and I want to explain why. So let's begin. This was our initial trading idea. Okay, this is where we went risk-free and our initial target zone reached, and we are still carrying on the final part. This one is now more than 1,000 points in a profit, and again, that's the power of this strategy. And I want to explain in this video what, how, and when could be used. All right, so let's begin with, again, the initial idea. Why at all am I looking to sell at that very point? So I'll go back to the image in a second, but first of all, how do I use the divergence, and what is the divergence for me? And again, what you will see in this video is a brief explanation to the whole thing. If you want to take it one step, or actually many steps further, I invite you to join us in Traders Academy Club and to learn all the trading techniques in real time, because they are delivered to you in real time with the trading ideas. So for me, in that case, the divergence in multi-time frame, and the way I find it, and I will use my virtual trading pen to draw on my chart. So it starts with the weekly, where it's a clear uptrend, and we still have higher highs, higher lows in this uptrend. But this is where it starts to be interesting, when we have high number one and then high number two created. What we can see happening on the MACD is a creation of lower highs. Beautiful sign that the buyers are losing their momentum. At that very point, it triggers my eye, but it's still not enough. On a daily chart, same story. On the most recent leg upside, we also count the same thing exactly. Higher highs on the chart, lower highs on the moving average of the MACD. And on the 4-hour chart, this was the scenario right here. Let me just draw it right here, where the trigger initially came in place for us. This was the place. And as you can see, what do we have here? And what you see here, that's my indicators that help me to find the divergence, false break, and convergence combination. So here we are on the 4-hour chart. Note, this is the third time frame out of the 3 time frames combination, and that's the strategy. 3 time frames showing the same thing exactly, the same style of divergence at the same level. And on the 4-hour chart, we got 2 fake highs. This is the first high, this is the second high, this is the third high, and the second was failing to break and hold above the first one, while the third high was failing to break and hold above the second one. Right afterwards, for the first time, we broke the low, making lower lows. Quick pullback and a fail again to go above the highs. Beautiful engulfing right here at this place. Bring us to the same conclusion. Okay, the buyers are losing it. Besides that, as you can see here from my key trading volume indicator, we have a strong volume building up here. Good sign, good indication that might be the sellers. Initial first potential target zone for us was here, the Fibonacci expansion level on the most recent trending structure, which we've had here. Okay, so after quickly reaching the first target zone and making the initial management, we go mainly and make it risk-free, meaning in case the market would push it up again, we don't have a risk. But the market did not push up, and after making the initial target reach, yes, we've had a pullback, and it was really impressive at some point of view, but it was never enough to go and to hit the risk-free place. And this is where I want to put the focus on, okay? Note, this is not a short-term trading. This is a long-term trading. And we already did the initial management, okay? We are risk-free now. So there is always the question, how long should we carry, and should we carry at all? And that's where I want to give my tips here. Look, in the business of trading, we are here to make money, at least from my point of view. I don't care about being right more of the times. I don't care about building my ego and making my right analysis. I care about the trading opportunities when I find them, that while I trade them, I make more money when I am right than I lose money when I am wrong. Okay, and here comes a very important thing, what I call a total performance. What does that mean? If you had a good week or a good month or a good quarter and you are in a big profit already, then let your trades run, at least the final part of your trades. Right? Because in a worst case, they will go in reverse on you and you can always close break even, right? It's a risk-free. But in a good case, they will skyrocket or fall big time in that case, and then you would simply boost your profits dramatically, because right now the final part with a 1000 pips movement could pay even more than the first part, and it still has a potential room to move further. Okay, so what I say here is, if you have your good period, you don't need to rush. Always remember, when you have 3 time frames, divergence pointing in the same direction, and on the lower time frames out of the 3, you got the reversal sign. Remember, I showed you what after the false breakout, we got the convergence on the 4-hour chart. This was the first potential sign. Then here comes the management part, right? So we made the analysis, we made the entry, and then we are managing. The first initial part you manage with the entry time frame, and then you can go to the higher time frame. Now, when I watch on the daily chart and the weekly chart, do I really have anything against me as the price moves down? The answer is no. So why would, look at the volume also building up here and the price breaking through. At the moment, the bearish signs are there and they didn't change. Ideally, we should be carrying on towards the next key zone, and we have two of them, one here, one lower around the 13,000. I don't know to predict will that really reach that or not, but I know to say currently there are no signs against me, so I carry on. Where it will become a moment of concern for me, at the moment I will start to see something like that, a divergence that builds up against me and against my direction I choose to go with. Okay, in that case, a sell. Because then it would be basically a sign that, okay, not just the lower time frame has signs against me, but also the higher time frame. And in that case, I would consider to make a management. So the trading strategy using the multi-time frame divergence is first of all synchronize 3 following in a sequence time frame. So for example, weekly, daily 4 hour, or daily 4 hour, 1 hour, for example, right? With ideally moving average divergence on the moving average of the MACD, of course, in the same direction. And then on the lower time frame out of the 3, look for the flip when, if it's an uptrend, instead of higher highs, higher lows, like in that case, right? Instead of higher highs, higher lows, we flip that and we started to create the lower lows. Okay, and then of course it follows and making also the higher lower highs, right? So it starts, we see the flip, fake highs, right? Then lower lows, and then basically we have lower highs as well. Okay, and this is where it gains a trending structure and it gains the bearish momentum in the direction you would like. Okay, so once you get this combination, this is your potential entry. And for the management, you want for the initial management to follow the lower time frame where you got involved. Okay, if you got involved in a 4 hour case, then follow the 4 hour chart. And for the final targets, you can carry on with both the highest time frames among the 3 you are using. And as long as they don't have divergence against you, you simply carry on. And remember, because it's a long term, you need to understand it, first of all, might take time. Yeah, it could take time. And in my case, it's like about a month right now as I record this video, and I still carry on. And as long as the market is with us and there are no signs against us, it pays, and patience pays off. As simple as that. And second, remember, if you hit your trade and you nailed your read correctly on the market, you could get paid big time. And this one trade that would pay you so much could be a huge booster in your total performance. So it is important to manage your trades, of course, and not to let it to, random market decisions. But also it is important, if you are doing good and you run into good profits, let the market work. If you read it correctly and the move really happens the way you expect to happen, and such strategy could increase the odds this move will happen in your favor, then you could get paid big, and even very big in that case. Okay, so let me know, what do you think about divergence trading? What do you think about this strategy? And once again, if you want to take it few steps further and to see how all my trading ideas delivered real time using my techniques, and the important part here, I teach my techniques for analysis, for the strategies, and of course very important to when we actually trigger, when the convergence comes in play, when the lower lows come in play, hidden divergence, etc., etc. And the third one for management. So if you want to see how it all done in real time and why, and learn all these techniques, I invite you to join us in our trading family, the Traders Academy Club, and you can find the direct link to that below this video in the description or in the pinned comment. Thank you very much for watching this video. I hope that it's clear in this strategy, and I hope to see you with us taking it further in your trading journey. If you have any questions, let me know in the comment section. I'll be more than happy to assist. Take care, stay well, stay safe, and I'll see you soon with more videos and more educational content.